To the incumbent exchange now, and that post-Europe bounce is looking distinctly overdone. Earlier I spoke to Charlie Aitken from Bell Potter. Well, Charlie Aitken, a rather quiet start to the week. What's been the focus?
Well, it was an interesting start to the week. The market losing 50 points to end the month, but remember it's been a wonderful month in equities. Even last week, market put on 200 points. Today, look, just a little bit of nervousness ahead of the Reserve Bank's crucial meeting on interest rates tomorrow. People not sure whether you're going to get a rate cut tomorrow or not. I think you might, so hopefully we can. And also the Bank of Japan intervened in the yen, which destabilised all dollar-based currencies. And you can see the Aussie dollar is down as well, which also dragged down the market.
Let's go to stocks. And Telstra is one stock that is up in the softer market. Anything on the NBN deal?
Well, it seems they're progressing with the ACCC. That is the final step. The market won't re-rate Telstra shares until they see every box ticks, and that includes ACCC approval. But they made a statement today where they said they're working well with the ACCC, and it feels like they're making some ground. So Telstra shares are really doing quite well in a bad market today.
Now I see construction heavyweight Aitken Holdings has played down its credit downgrade by Moody's. What's the market thinking about Aitken?
Oh, you'd be a very rich person, Ticky, if you did the other side of every downgrade or upgrade by a credit agency, I'll tell you that. I mean, the credit agencies are always late to the party. This is a small downgrade to Baa2 for Aitken, but look, it wasn't helpful today. Aitken said it doesn't affect any of their current debt maturities, which is probably right, but these downgrades aren't helpful. They get headlines, but they're always after the event.
Do you think investors are interested in the big shareholders and the play going up above Aitken Holdings?
Been an ongoing saga, that one, I think, Ticky, for 2 or 3 years now. Board shuffling, chairman's moving. But notice that Hockteef's shareholding hasn't really changed, even though Hockteef have got taken over by the Spanish. But look, I think it just frustrates people. It's just a saga that won't go away, and it's one of the reasons that Aitken shares have been underperforming. So yes.
OK. What did you make of the full-year profit result by BT Investment Management?
Not too bad considering market conditions. I mean, BT's got a good brand. Their performance has been OK in their funds. But the big thing is the company is taking a big bet on UK equities, buying Joe Hambro or J.O. Hambro in the UK. That's still a deal that's being bedded down and financed. And the shares are more likely to react to that deal being bedded down than today's profit result, which really, in the scheme of things, wasn't too bad.
Woodside Petroleum jumped 1.5% today.
Woodside was a bit of an interesting one today. Now, the resource stocks all had a bad day because the currency was weak and the US dollar was up, etc., etc. But Woodside snuck up nearly 2% on a rumour, and just a rumour, that 2 Japanese trading houses are thinking of taking out Shell's overhang in Woodside. Now, if that happened, it's 24% of the company, not a full takeover, just the shares. The market would react well because it's been waiting for those shares to be sold on market. So we'll see about that.
And we always love a rumour. Thank you, Charlie Aitken, for joining us.
Thanks, Ticky.